Hey fellow Stockcardians, it's Hodamer, founder and CEO of Stockcard, and this is our stock market daily roll show. It's August 25th, 2021. Today I looked at the optimism that kept the market barely in the green. I also dug into Dick's Sporting Goods stock and earnings report. Then I created a screener for specialty retail stocks that have gotten stronger thanks to the investment in an integrated online and offline experience during the pandemic. You may want to consider a few of them on your watch list. Let's dive in. The market indices ended the day in the green once again. While today's gains by the indices were relatively small, they still nudged them into another record day for both the S&P and the Nasdaq. The number of COVID-19 cases continues to rise, but the growth rate is beginning to decline. The slower growth rate is bolstering investors' confidence that we are still on path to reopening. Also, the market is hitting highs partially due to the possible new multi-trillion-dollar economic bill that the Democrats are working on. Overall, the market is nudging forward slowly. Folks, we are running our call for your feedback one last time today as we continue to look for ways to make this daily roll even better for you. Thank you to many who already filled out our short feedback form. We appreciate you. To the rest of you, please help us understand how you like the daily roll shows. Do you like the format? Do you want it shorter, longer, or less frequent? What is the most important thing you'd wish the Daily Roll Show to share with you that you cannot get anywhere else? I'll leave a link to this quick 2-minute feedback form in the show notes. I'll also leave a QR code on the screen if you watch this on YouTube or Facebook. I would appreciate it if you can share your ideas. Go ahead, pause the show, and give us a few pointers. I'll still be here when you get back. Thanks again if you just took the time to give us some pointers and fill our feedback survey. Today, I was browsing the winners list of stocks on the Stockcard, and a 4 greener stock caught my eye. Dick's Sporting Goods, ticker DKS, was up by over 13%. The company released its quarterly earnings report today. It beats last year's quarterly revenue by 20%, and even beat pre-pandemic 2019 sales by 45%. It emerged from this retail woes of the pandemic stronger than ever. On top of this, Dick's is sharing the rewards with shareholders. The company already pays dividends to its investors, and the management raised it by 21%. For the cherry on top of the cake, shareholders were gifted a special one-off dividend of $5.50 per share. Let's take a look at Dick's Sporting Goods Stockcard to learn more. The company is doing great in terms of sales growth, profitability, and generates almost $2 billion in free cash flow. The one part contradictory to such growth is the price to sales ratio of nearly 1, which you can find under the valuation multiple section. This is again a similar story to Best Buy, ticker BBY, that we discussed yesterday. Investors assume brick and mortar retail is dead. However, retailers with cash and a strong brand have managed to prove them wrong. They also typically pay a dividend based on their solid balance sheet and free cash flow. For Dick's Sporting Goods, you can see it scores well across all 11 dividend criteria under the Our Strategy section on its Stockcard. The upward trend at good performance by Target, Best Buy, and Dick's Sporting Goods got me thinking, what other specialty retailers are out there? I started a new screen on a Stockcard's screener tool, added this specialty retail collection in the screener search bar, and picked a few specific filters: a small cap, mid cap, and large cap, a strong cash availability, and good sales growth. The result was 18 stocks of strong specialty retailers worth considering. I'll leave a link to this screener results in the show notes for today's episode. Let's take a quick look at 2 of the search results from this screener. The first one is Hibbett, ticker HIBB. It's another sports and outdoor equipment company with around $1 billion in market cap, much like Dick's. It has over 1,000 stores spread across 32 states. The positive numbers from Dick's earnings report likely warmed up investors to the possibility of similar success for Hibbett, which will release its own quarterly report on the 27th. The company's management moved quickly when lockdown began last year and adopted many effective online means of retaining sales, like same-day home delivery, buying online and picking up at stores, and even a mobile app where customers could browse and purchase. Its stock card has solid green ratings for sales growth, profitability, and free cash flow. You would have made bigger return in the past 3 years by investing in Hibbett compared to the S&P 500. One more hidden gem that I found on our list is MarineMax, ticker HZO. This stock is another four-greener like Dick's. I had never heard of MarineMax before. MarineMax is a specialty retailer that deals with recreational boats, old and new. It also sells engines and other parts. MarineMax is the largest recreational boats retailer. To add to its revenue streams, the company also handles plenty of boat insurance and chartering and brokering yachts, which gives its revenue some optionality and diversification. According to the company's stock card, the shares are undervalued, coming in at $50 per share despite great returns on investment, sales growth, profitability, and free cash flow. In its last earnings report, management raised the future guidance for the year, so I have difficulty understanding why the stock card shows such poor investment sentiment, why investors are not happy with the stock. Overall, specialty retailers like Dick's, Hibbett, and MarineMax benefit from being leaders in their niches with forward-thinking management. The past year and a half have given these cash-rich companies a chance to transition to e-commerce and still create an excellent in-store experience. The pandemic has worked wonders for them, and we now see them harvesting the benefits. You may want to have some of these solid retailers in your portfolio, especially if you look for stability and cash from dividends that most of these companies pay. Folks, one last time, if you haven't already filled in our feedback form, I'll leave a link to this quick 2-minute feedback form in the show notes. I also leave a QR code on the screen if you're watching this show. This is our last day running the survey, so I would appreciate it if you can share your ideas. Thank you for taking the time and lend us some feedback. That's it for today. If you haven't already done so, please give a stock card a try. Research as many stocks and ETFs as you want, and consider following a few investors by visiting the Stock Picks page on the Stock Card platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHRCO, all lowercase and in one word. And like, subscribe, and share these daily market recap reports with your fellow investors. Come back tomorrow for another episode. I'll see you then.